Okay, guys, it's January 24, 2022 here in Manila, and we're broadcasting live with folks in the Awesome 10X team. We've got Doc Ty, Doc T, or Doc Ty, whatever you call him,
The Rock.
Martha, Chef, The Rock. So we'll come up with nicknames next time. But it's been a really good week. Good week for the Bears. It's been destruction mode, and I think like from the last 2 weeks of podcast, the super bear in the team was Jeff Chow, and he was massively right. So congrats. I joined the short team a little bit late, but I was happy that I joined. His massive call that ARC could fall as low as 60 or lower is happening right in front of our eyes. So I think for this week, we've got some huge earnings. I don't know who wants to start, but we could talk about earnings whispers. I'm going to share it here. Wait up. Wait up. Let's start with this week's earnings calls. Wait up. Um, I'll try to share on my screen. Okay. So I'm sharing this week's earnings. So we've got a bunch of big caps. We've got Microsoft, Tesla, Apple, McDonald's, AT&T, Boeing, Chevron. Um, who wants to start giving their earnings expectations for the week? Is there anyone who wants to start? Maybe Doc Tai. Can I hear what you think? Are you playing earnings this week? Anyone? Yeah, go. Doc
So
T, that Jeff, the Martha.
yeah.
Go.
Um, so as far as this past week, I've been completely inundated, and um, and this is like it's like the nice thing, but it's also like the downside. As soon as you're just as soon as your head is out of it for like a week, then you're behind the curve a little bit, right?
Mm-hmm.
So I haven't had a chance to look at any of the earnings. I do have like a very broad global macro view that I shared, and I think you guys are kind of all familiar with it, if you've been in the Discord chat. But the one company that kind of popped up there that really jumped out to me, and it actually just so happens because I have my student loans through that company, and I know they had like a very big issue is Navient. They're a huge student loan company, and they had to like settle billions of dollars in lawsuits, and my student loan actually got turned over to another company called Advantage. So that kind of just jumped out right at me because and actually I used to own a lot of Navient. I had a habit of just investing in places that I sent money every month. So I figured, if I'm going to send money to like Discover or Visa or whatever, if they're going to pay me a dividend back to being invested, and I'm paying them anyway. So Navient really jumps out at me. The Nextera Energy is another one that I think it's utility, it's defensive, and I think if our sort of bear view of being very defensive plays in, then utilities is probably going to be at the forefront. So as far as Tesla, yeah, I mean, there's no doubt about it. It's overvalued, but the growth there is it's insane. Like I've never seen anything like this. It's really like a once in a lifetime opportunity. But if you're kind of looking at it, if it sells off after earnings, then I think you have a very good buying opportunity, and I suspect it will sell off out of earnings. So.
Yeah. Thanks, Doc. So you're bullish on next era energy
Mhm.
and Tesla, but only if they fall after earnings because they're gonna be high quality, safe haven companies. And
Yeah.
what's the ticker symbol that you were sharing? Navient. What's
Oh,
the ticker?
Navient. Off the top, I think it's NVNT. Yeah, yeah,
NVNT.
yeah.
Okay, so
It's like yeah.
I'm familiar with next era.
It's very boring. You probably
Ah,
don't
no.
want to own it because it's
Mm.
boring. I only owned it because I have a habit of if I have to send a check to a company every month
You try
and
to
I
check
see that
what
they're
it is.
publicly traded and they're going to send me money back for just owning their stock, then I feel like I'm paying them and they're just paying me back whatever I'm sending them. You know what I mean? Like that's my mindset.
Do you know what I'm so impressed this week? I'm gonna share to you this cursed stock. You guys still remember Limelight? I mean,
Oh yeah,
that
yeah.
stock, it's
Yeah, I
so
saw that.
weird.
I looked up
I
I
mean,
Limelight.
saw it.
it's
They're on
so
an
weird.
uptrend.
In a
Yeah.
market sell off, how could
They're
this be the
Wow,
safe haven?
wow, yeah.
I
oh
mean,
my
it
god,
had
it's
it
so
had shot up from 2 to 4. I still am bewildered. I
Yeah.
mean,
strong earnings maybe, I think it looks
it
like.
was. It was. There was earnings last Friday, strong earnings, 12% up on strong earnings. But I thought that good earnings was not gonna be cared for by the market. Or maybe because small caps, nobody actually take a look at it. I guess like nobody's shorting Limelight. I mean, wow. I said to myself, wow,
It's like
there could
it's
be
one of
some
those things
miracles.
where
There's some
like
miracles
a
happening.
lot of these companies they become value at some point. They're
Yeah,
just
they are value.
you see they hit like a triple. I mean, there you can see it perfectly. There's a double bottom, and then you see a
Mhm.
spring happening, and then it just as soon as you start to see the volume out of that spring, it's good. It's going to go. I haven't looked at the chart, but that to me, I mean, just you flashed it for like a second, and I could see it
Yeah,
perfectly.
here, let's
Double
show the
bottom.
chart
You got a
now.
little
I
spring
mean,
there.
this is one of those few stocks that are breaking above. 250 was
Yeah,
those like
yeah.
bottoms,
Like
then
you see that
350.
right there. As soon as you see it hold that right
Whoa.
there, and you see volume coming in
Uh-huh.
at the top there, like it's going to go at some point.
Uh, yeah, I wonder. I actually wonder if it's like value investors pushing Limelight. But either way, I'll just watch the stock.
Hmm.
I don't know. I obviously won't buy some momentum longs in this market, but that was really surreal for me. Like, wow!
Yeah,
I said,
yeah,
wow, there's
yeah,
still good earnings coming out, and people are still buying. Apparently,
yeah.
who wants to go next? Jeff, how about your take on
Well,
earnings or the markets?
Oh yeah, Martha, you can go ahead.
For your
I go.
heads up.
uh,
Oh, Martha, go ahead.
on earnings, I'm interested in mainly in three: Johnson and Johnson, to see. Uh, I guess it will be a bit, but you never know. You don't know right now. The other one is it will be very interesting to hear the earnings call on Intel. I think that they are having good plans, and perhaps it's becoming a value play. And the other one, since I'm interested in the chemicals and the materials, like a safe haven, the Dow chemical is reporting also. I think it's Thursday or Wednesday, if I recall correctly. It's Thursday before market opens. So those three, mainly because I think that Intel might become a value play. Johnson and Johnson is like the dividend aristocrat and safe haven, and
Mhm.
is, as you well recall, the materials it will be a good play, and I think Dow Chemical should be doing fine. So those three are in my watch list, but I'm playing safe. I'm not playing like it's just momentum for those three, and I'm trying to close all my longs. And I was sharing with them, Ty, that I'm trying to close my longs, and if I'm long, do it through synthetic longs. The video that I shared to you, that I'm planning to use with Palantir. So that's my take on no more longs for now, right now.
Okay, so I'll summarize it. So you're bullish on Intel because it's a budding value play in amongst the semiconductors. I could agree, especially since I do see that turnaround play with their mobile and a lot of their recent earnings was actually improving. But it's just really the sector that's it's really the macro more than the company. So you'll watch Johnson and Johnson. Agree with that. Safe dividend play. Maybe if it falls 5% or 10% lower, we'll try to see. And finally, your bullish on Dow Chemicals. I'll take a look at that. Um, Before we begin, Jeff, were you aware that Activision Blizzard was gonna be bought by Microsoft? Was
Oh,
there? I mean,
I wish.
wow! But this week was
He would have been
super I think
Jeff would
some
Jeff
people
would
had
be
some
Jeff would have
Activision
been
bonds.
working. Jeff would have been working for Activision Blizzard, and he's just like, "Give me all the money,
He could
just give
have
me my
been
payment
an
and stop."
insider buying
Give me
It's a
stop.
smart
dollars.
move. It's a smart move, and it makes
He could
gaming
have gone
companies.
Nancy Pelosi style there. It's just that he couldn't reveal that he knew the deal.
Yeah, it just shows you how critical gaming companies are. That Microsoft is such like an
Yeah,
almost $8 billion
it is.
acquisition. So can you guys hear me, by the way? Is that mic working?
Yeah, we're
Okay,
able to
cool.
hear it. Go.
Pro
So
streamer.
yeah, exactly. My gaming headset, Logitech. Yeah. So the main things I'm looking at for earnings is actually
Logitech.
the
Logitech?
main. No, actually, it's guidance. It's more guidance. I don't really care about what happened in the past. The market is about pricing the future. So, what is the guidance from Apple, Microsoft, and the big FANG stocks?
Mhm.
So, Intel will be interesting as well to see how much of their business they've gone
Okay.
their stuff together, because honestly, I think Intel is a value play, but they're just getting destroyed by competition from AMD and so on. So it'll be
Okay.
interesting to see, how they're trying to do their turnaround, and the market could price them accordingly. But for example, the main from an earnings perspective, not only the FANGs, I'm looking at Nucor specifically because it's commodities and steel, and Western
Okay.
Digital because again they make memory and it's commodities. And one thing that I think is going to happen with the earnings season is as you guys know from a macro perspective, we always rally during earnings, right? And the market then overshoots to the upside, and then we sell down towards OPEX, FOMC, and then before the next earnings cycle happens, and then we then will start to get a bounce. So what's happening right now, if you look at steel and what the CEO of like Stelco Holdings, and you look at auto demand and everything, we're actually seeing excess inventory now. So steel prices have dropped. There's an oversupply and shrinkage of demand in inventory numbers. If you look at cars, specifically cars, right? We peaked in April at like 18.25 million units. Um, at adjusted annual rate. And then now, if you look at sales now, you look at October, they fell from 13 million to 12.9 million to 12.4 million from November to December. And GM had reported their earnings, and they're not selling as nearly as many cars as anyone expects. It'll be also interesting to me to see if Tesla continues to grow. Then we're going to see Tesla literally a massive short covering if they beat their earnings, because they're basically taking market share from their competitors, and they're growing when cars inventories are going down, right? So what that means is we're actually going to enter a period of deflation. So inflation is everyone's scaring, they're pricing it in now, but the crazy thing is we actually might switch the narrative to where China is suffering from growth. A lot of countries are not meeting their GDP forecasts, and then because of COVID and the liquidity and then the huge demand that was brought forward, we now have oversupply, and we're going to see the reverse happen, which sounds crazy right now given like what just happened with the market. But if you look at like the prices of steel, copper, right, they all dropped like 30 to 40%. Iron ore prices have dropped 35%, right? The Baltic Freight Dry Index declined more than 40%. I talked about this in my Quick Trade channel. Like the shipping costs are actually declining. DRAM prices, Western Digital is very important, and Micron. DRAM prices have dropped 25%. U.S. lumber prices have dropped 33%, and even oil has declined about 12%. Right. The only exception is if Russia invades Ukraine, then oil is gonna skyrocket, and that's just a black swan event. We can't really price that in. So what's gonna happen is the narrative is gonna start shifting. I think through earnings here, we're gonna chop, and then the Fed might say that, hey, we're not going to do 4 rate hikes. And what's interesting is if you look at the forward futures of the Treasury, they're actually pricing in 3 to 4% inflation. So you look at the Treasury yield. Let me get the data here. I read an article, but they're pricing in actually lower inflation than what people expect. So what's going to happen is
Our
the
president.
is the
Do you
market
want to
sentiment.
share your screen if you have like some data there? I think you can like click share screen so
I
that
can.
we can also see the data.
Let's see
There's
where.
like a share button down below.
Okay. Oh, there is. Okay, hold on. Let me
Just try to share.
It's right in the
let me
middle at the
share it.
bottom.
Oh, there
Yeah.
we go.
Yeah. share screen so we could see like. But it's interesting that again, Jeff
I
is
just,
gonna be God
just,
You
if
guys see
he
this?
manages to find the
not yet,
bottom
not yet.
of this market. God,
Do you guys see this?
Oh, yes.
yes, you
Oh,
can
It's
see it.
it's a
Yeah,
paper.
yeah.
yep.
It's
Okay,
a
so it's a
paper.
so it's an art paper, right?
Mhm.
So so if you look at Treasury, hold on, yeah, right here. You look here. I'm gonna
Mhm.
highlight it.
Okay, the yield curve.
Yeah, so basically they're pricing in
Yep.
a probability of recession, lower
Uh-huh.
inflation. So they're pricing this in because you look at the economic data, demand, we had so much inventory that demand is actually like falling now. So what happens is we're going to basically shoot to the downside too hard. The Fed is going to realize that okay, we have to raise rates, but they're going to realize that inflation is transitory. It's actually literally going to come back because
Uh-huh.
demand and GDP is not growing. It's GDP for a lot of countries like China is already starting to actually decrease their rates to spur growth
Yeah,
again because
yeah,
they're lacking growth, and every country has to grow because it's politically the way to survive politically, right? Because
yeah,
without growth, you're not gonna get jobs. So basically, what's going to happen is people are going to then the market's going to get ahead of it, and they're going to basically trigger a huge short covering rally because all of the people that think the market's going to crash and all that, which is not going to happen. A crash happens when there's something systemically wrong, or there's like a black swan event like COVID or like a war. That's when market actually crashes, when mutual funds and all these like trillions of dollars, they just want to get out the market and move into treasuries and flight to safety versus the stock market. So we're not going to crash. This is just an overreaction to the Fed, and they're trying to price in. If you notice, Jamie Dimon was like, "Oh, the Fed should hike 7, 8 times." They're overly bullish on rate hikes when the Fed could actually do too much. So the market is just selling because they're uncertain what the Fed is going to do. If the Fed is going to price in like 4 or 5 or more rate hikes, then we're going to continue to go down. But I think at FOMC meeting, it's going to clarify that, and we're actually going to rally off FOMC and the earnings because if Apple talks about guidance, if you hear guidance from all these big companies like Nucor Steel, if they start saying there's significant oversupply and there's shrinkage of demand of steel companies, and you see car companies, you see Netflix, right, missing earnings, you see Apple, Microsoft, all these big companies they start guiding lower, then it's gonna be the reverse of what people are gonna
yeah,
think, because that means inflation is not a threat. It's the deflation is the threat. The lack of growth is a threat. So that means the Fed is going to actually not increase rates as much. And what happens when the rates don't increase, right? The market's going to price that forward and say, okay, the best place to be is still in equities. And they're going to literally shift all that money right back into equities, which is kind of crazy if you think about it. And if you look at the gamma too, with like how gamma, we hit -7 billion. I mentioned this in my chats. We hit -7 point, what was it? It was crazy. It was the lowest I've ever seen. 7.5 billion negative gamma, and that's too much. That gamma has to unwind now to the upside because everyone's so massively short. The put call ratio reached 1.3.
yeah.
Everyone is literally trying to short the market, and then all it takes is the FOMC to say,
1.3.
hey guys, we're actually going to project with slower growth. There's actually, the prices of all these commodities, iron ore, used cars, blah, 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 all these things are coming down significantly. If you look at here, right? I just mentioned this, but look at the price decreases, right? So we basically hit peak inflation, and now the market's going to price forward because we don't look backwards. Who cares about inflation was 7%? Now, if they see the inflation declining from 7 to 6 to 5, that's what the market's going to price. So that means we're not going to get the amount of rate hikes that everyone thinks we're going to get, because right now the market is pricing the inflation scare, and they think that the Fed is going to hike more than 4 times, which is kind of aggressive. You think about it. But the bond futures are not pricing that in. They're actually pricing in they're pricing in lower inflation. So the bond market always leads the stock market, and it leads the crypto market too. So if the bond market is pricing in recession, right, then I highly doubt the Fed is going to raise rates, or they're going to basically hike rates more than 4 times. So if it's 4 or less, we're going to rally. If it's like 8, we're going down. So that's kind of like what I think is going to happen. But it's very important to listen to the earnings of the companies and see what they say when it comes to supply, inflation pressure, and how much of that is they see oversupply. So if they start talking about oversupply, then the narrative is going to start shifting, because all the previous earnings, if you listen to the past 3 quarters of earnings, it's been all about costs are increasing, inflation. We're experiencing inflation, but now it's actually the data is showing that it's actually beyond us now. Now that used car prices are coming down, like I don't see us going back to crazy used car prices, crazy steel prices, crazy housing prices, because all that has been priced in now. We're building more supply of homes. Lumber has dropped significantly. I don't see lumber rallying back to those crazy numbers that we saw before. So we could actually see that a deflationary environment. So ARC will actually bottom around the 60 to 70 range, and then it's going to basically just go back. Because the companies that do really well during times of inflation and slower growth are going to be these innovative tech companies that are still delivering strong earnings and strong cash flow. So I think that's probably going to happen within the next 6 months. So the next 3 months will be very unclear. There's going to be a lot of talk about inflation, and the Fed will probably overreact, which will cause more downside, I think, in the near term, because it's politically not popular with Americans. The number one issue in America right now is inflation. It's not COVID, it's not healthcare, it's inflation. Everyone experiences it. Everyone's living through it, and because Biden and the Democratic Party, and it doesn't matter if it's Democrat or Republican, any party in power, they want to kill inflation. So they're actually going to start to influence the Fed politically, and then that's going to cause the Fed to basically overreact, which they always do. And then we then might have like more downside, and then I expect a very sharp rally to basically hit new highs, with SPY hitting 5,000, like within this year. Like SPY's gonna hit 5,000. I'm pretty sure, because of the central banks and how they basically are basically reacting too hard to inflation. And now because of the oversupply, there's too much production, and now the Baltic Dry Index is the biggest one. That's like the freight costs. It's dropped 40%, guys. Like that's a big deal. That wouldn't happen if demand was still strong. So we're seeing demand taper down. Inventories are building up because they're trying to keep up with the demand, and then we have a pendulum swing back to the other side, and that's the market for you guys. That's why we see crazy swings up and down, like 50% back and forth here and there. And it's just based on these macro narratives and sentiment. So that's why the earnings, I'll look closely to see what's going to happen. So it's FOMC on Wednesday, obviously that's the most important. And then what's the guidance from the mega cap companies? And then new core steel, like are they talking about deflation or too much supply? And then if that's the case, then I'm going to go long. I'm going to just literally just go long, because the market's gonna price in the Fed being again more accommodative, because they don't want to hurt growth. And with inflation dropping, if Powell talks about inflation is actually peaked, and then we're going to start to see deflationary pressures with oversupply and stuff, then yeah, that's a green light for the tech stocks and growth stocks to go right back into.
And if I flip that back to like COVID, I haven't had a chance to really dig into the numbers in depthly, but I looked a little bit at it, especially in the United States. We've really gone past the peak of what we expect in terms of people going into the hospital and having to deal with it. I won't go into it like on a personal level, but that kind of jives with what I'm seeing personally, and so I think there could be on the horizon a lot of good news in terms of COVID, that you would have to factor in the news. Like you'll get good news from COVID, and so if you have sort of good news that coincides with good news from earnings, though you can kind of marry those things together, especially. I think if you kind of look at like where we are right now, we have the Olympics coming up as well. I don't foresee, any kind of manipulation in terms of political things that could happen going into the Olympics. I think they could potentially slow that down to just make that happen. And so I'm going into this week. I haven't had a chance to dig into it, but I'm feeling bullish. I see a lot of things like just sitting on their VWAP, ready to bounce. I'm looking at the transports. They're sitting right there. They're oversold. And they look like they're ready to bounce. So I guess if I was into this week, I would say things are probably going to bounce. But is that a bounce that you should be selling into? Probably. I don't know when the face rip roaring rally is going to come, but yeah.
Yeah, so the short-term bounce will probably rally for 2 to 3 days, and then FOMC will then decide the direction of if it's going to go up or down.
Exactly. Yeah.
But the moving averages are pretty shot. You look at SPY, Dow Jones, QQQ, it literally just sold right through the 200-day moving averages. Which to me, that's actually very bearish. However, if you look at the price multiples for a lot of the FANG stocks, they're so cash rich and stuff. They're actually really cheap. Like Amazon breaking under 3,000 was kind of crazy. So Amazon might be one that would be interesting to see how well they'll do once they bounce here. So I'll be watching again how the FANGs do. But a lot of the charts are very bearish. They broke a lot of technical supports. But I think that the shorts will get trapped because when we hit 1.3 put call ratio, that is overly bearish. It's too bearish actually. I shared it in my channel, but if you look at like when everyone is heavy into puts, that's when you want to be reverse of that trade. You'd never want to be with the majority because they're normally wrong. So now the put call ratio has actually spiked to 1.3, 1.2, and that to me is signals that's the strongest indicator for me that we're close to a bottom for a short-term bottom. I'm not saying that we could rally from here or this is like the bottom. We could bottom again later on based on how FOMC goes, but I would say, and you look at crypto too. Crypto actually stabilized over the weekend. So if crypto is not selling off, then that's always a leading indicator of how the market will because crypto always leads the market. If you notice, I actually pointed this out like a long time ago. I said that when Bitcoin rallies first, the QQ will actually follow, and that's been the case every time. And then when cryptocurrencies start selling off, then you start seeing the equities start falling because cryptocurrencies are traded 24/7, and also they're speculative assets by nature, more speculative than anything else. And if it's risk off, then the first thing that people sell is the risk and the speculative assets, and that's why crypto is such a good indicator because if it's risk off, then you're going to see weakness there, and if it's going to bounce, then you're going to see crypto and all of the coins are trending or starting to trend green now. If you look at the futures and how crypto is doing right now. So that's why we're going to have like a short-term bounce, and FOMC, I'll see what direction it's going to go. But I'm not going to trade anything. I don't want to go short. That's too risky. And I definitely don't want to go long because honestly, the supports just got sliced through. Like you don't want to touch it because you don't know where support is. Like literally the 200-day got sliced through. So we need to see it literally bottom, retest the bottom where if it's 430 or whatever on SPY, it needs to retest 430
and then
hold and then come up. Otherwise, I'm not going to go long. There's no reason to. If you try to go long, you might bottom fish a falling knife, and it's not worth it. So and we suffer that the past. I've been trying to buy the dip on C, like Nikki said, and all these matter. Oh my god, like, I can't believe it went down to $10. It's just shocking, like how much you don't know how low is low, and a lot of these companies are still at a pretty high valuation. Like Nasdaq needs to come down to right now it's priced at 23 forward price to earnings ratio. It needs to come down to like 18 to 20. So basically, that's 4 divided by 20. That's another 20% drop in the Nasdaq if it were to price accordingly. So that's when I'll definitely go long.
You really have to be, in my mind, you have to pretend like you're in April, May of 2020, but you are buying the dip, but in reverse. Like, and that's the mentality that you have to be in, and just expect that 2020 is going to be like that's the expectation that you have to have in some way, and until it's like proven opposite, then you reverse course. There's too many things. There's just too many things. I think there's things on a macro level that I see, and I see things that I are very, very concerning to me. They have to unwind all of this in some way, and when you think about it, like as a policymaker, you cannot be the one responsible for unwinding it. Some other external events may come along that sort of unwind it for you. And so those are the kind of things that I'm thinking are probably.
Yeah, like SPY right now is 70% puts. There's no way we're gonna go down further because that's too heavy puts. The market makers are not going to pay out all that money.
Yeah.
They're gonna lose so much money. So basically, they're gonna pin it, and they're gonna keep it around the 440 range, I think, this week until FOMC decides what move it's gonna make. And the other thing too, if you look at like steel, like Cleveland Cliffs, which is iron ore, United States Steel Corporation, Nucor, they completely I guess crashed because I mean Cleveland Cliffs went from 24 to 17, you know, so the commodity prices are coming down significantly, and if inflation is such a big deal, why are people selling off commodities? Because they see the data, the inventory, the steel prices. There's a lack of demand. So I would follow those prices. And if the market price is in peak inflation, then we're going to rally because inflation is no longer a threat. It's more about deflation, right? So but I don't know when that narrative is going to come. I don't know if it's this earnings or maybe the next cycle. But I did say that my original kind of prediction was that February would be our low. I think around like February was going to be our low, and then we should rally into the summer. And then we'll see what direction the market goes from there. But like you guys said, it's like really tricky to bottom fish. And I look at what's actually been more accurate for me is the options flow, the bond yields, and then the put call ratio. Those are probably the strongest indicators of what direction the market's going to go, versus any other fundamental, because we're so gamma driven. We're so driven by because options flow is actually sometimes like Tesla and Apple. Sometimes their options delta is bigger than their stock, like their implied value is actually bigger than the stock movement, which to me is kind of nuts. We've never been in this market ever in our lives, and that's why that can drive prices, short-term prices, up and down so fast.
So
yeah.
here's a question, Nikki.
Yeah.
If you're in this environment and you're going to go long on something, right? And you currently have like the buying opportunity of a lifetime in your view. What is that? What is that company? And what is that? Like, where are you going? Where are you putting everything? Like, you just want to put it all there every month and not think about it.
Well, I don't disagree with Art, you know. I mean, as much as Kathy Wood is getting killed, memed, I saw like a Pornhub meme about her fucking all the shareholders. I mean, I think that
Can we put
those
it up on
are-
the screen? Can we see
have you seen that? Oh wait,
We're gonna
I'll
get
find
banned.
it.
We're gonna
I'll
get
try
banned by
to find the
YouTube.
meme. I'll find the meme. But yeah, so I think just to save Kathy's memes, I think Art has been killed to the point of people thinking that she's just gonna go to zero.
Yeah,
The hard
no.
part here is that she could be right, but how many people would still stay when there's that vast underperformance? And I would agree with Jeff. Sure, the puts are overly shorting the market, but it's not as if they're pressured to cover all the same. Like if you've been short the
No.
big growth stocks, Roku, Square, Teledoc, at some point in time, I think Teledoc's just gonna be bought by Google. I mean, you are a doctor. You probably know just how many patients they are daily. It's not. I find it surreal, to be honest, to find Teledoc trading. Is it $70 now, or is it below 70? Where is it now? Even. I mean,
It's below book value. Yeah, it's
it's
crazy.
70.
Oh,
It's 70.
Yeah.
I mean,
In my
I'm not-
head,
I'm
that
not-
means somebody wants it really bad, and they're trying to push everybody out. And
they want to get
capitulate.
in at 50 and then just
They
They
privatize
want to get
it
low.
for all
They're
we
trying
know.
to push it low until
Yeah.
everybody just quits.
it's just
and
like once they have a good earnings where their operating cost is decreasing while their revenue and everything else is increasing, then Teledoc's going to get priced to like 120, 130 minimum. Because right now it's just their costs are moving up as they're growing, but once they control their cost, then their narrative completely changes to a very, very profitable, high margin company. Because they have really high margins. So that's just the problem. Like all I need is one earnings to literally turn that entire stock around.
The problem with ARK though
Do
is
somebody
that
remember what was the amount they paid for Libongo? I think that it's
they
I think it was
paid
like
for
10
less than
10
Livongo.
to
the
20
actual
billion,
price.
Right now, Livongo's free at current levels of Teledoc. I mean, you just
Yeah,
got the entire business for free.
it's
It's
crazy.
like Teledoc's now trading below where they bought that company. I think
It's crazy.
I don't disagree with Jeff saying that yes, there's massive shorts, but at the same time, heading into FOMC, I think like Monday or Tuesday, you're getting a bounce. Sure, you get futures to go up, but those buyers are all people who have massive shorts covering their shorts, and they're probably just going to cash. So, what would turn the narrative? I was actually surprised that the thing about the smart people, Jeff is smart, or Kathy Wood is smart. Being too smart is actually getting killed because how fast is deflation gonna come? Even if Kathy's right, we're gonna go deflation because of all these technologies. I feel as if the validation comes after 6 months, and he's right. If the Fed will overkill the system with a rate hike because it's unpopular not to, look, if you are the Fed and you are politically inclined to save your career, do you think that it's right for you not to hike the rates when everyone's clamoring about inflation, even if the majority may be wrong about inflation, even if inflation could be just a 6 month, 12-month thing, and then it's just gonna go from 6 to 5 to 4, who knows? Because I think 90% of the people are not smart. No, we aren't as smart as Kathy. We aren't gonna be as smart as Jeff, who's looking at Baltic Baltic index is falling. You've got actually a bigger question, which is recession, not inflation. Actually, my question is, if we have a recession, where would the money park? It's still wouldn't
So
park in growth, right? It's still
yeah,
gonna park
so
with cash.
yeah,
Cash
so
flow.
what happens when that happens is basically everyone's gonna the Fed's gonna try to fight inflation. The market comes down, which it's already pricing that in. Actually, it's been pricing that in since February
It's been pricing
because
in.
the market is forward thinking. Again, I can't emphasize
Yeah,
enough. The market looks ahead, and they price
yeah.
things like 6 months to a year ahead. And that's why since February 2022, the Fed didn't really talk about inflation. They said it's transitory, blah blah. But the market already priced the bond already priced it in, and that's why you're not seeing bond rates. If inflation was a real problem, then bonds and treasuries would be way higher than they are today. They're not, right? They're pricing actually in a recession. So what happens? It's a part of the economic boom and bust. So the Fed went too heavy into the money printing. They're buying 120 billion in bonds every month, and because they're not doing that anymore, liquidity is being removed from the system, right? I remember talking about crypto. It lost $1 trillion in value in like a month. If you think about it, that's a lot of money being sucked out the system because they're trying to price in the Fed. So what happens is they overshoot to the downside, and it's happening right now as we speak. So what happens is the Fed will talk about inflation, raising high speed. It's politically the right thing to say because you don't want to disappoint the politics or the American population. Like inflation, we need to fight inflation, which is true. But if you look at the data behind everything else, the bond prices, the actual indexes of supply chain, all that supply chain issues will go away, right? The only exception is China because China is like shutting down and trying to fight COVID. They're still trying to do COVID zero. Australia, Spain, all these companies, we're 90%, 80% vaccinated, everything's opening up. We're not going to shut down again. Like life is returning to normal, and we just have to deal with COVID. So we're not going to have any more supply problems. Supply chain problems will go away, and when that goes away, we're going to start seeing an influx of so much supply. Peloton is a very very like a normal example of that. But a lot of companies will start talking about how there's more supply than demand, and that can switch very quickly because when you have inflation and so much demand, right? Because the supply chain problems. Think about it. The supply chain problems have been going on for 2 years since COVID, March 2022 or 2020. It's now going to be March 2022. That's been 2 years of supply chain issues, and that causes price to go up. And there's so much demand because all the money and stimulus went into all these countries. What happens? The factories are trying to overproduce to keep up with all the supply, and now they've actually built too much. So it's a testament can actually switch in literally in 6 months or less. So it's like, so what's going to happen is when that happens and we are facing a deflationary environment, that means the central banks will then now try to accommodate and try to get the economy growing again. And if the prices have come down, the multiples have come down from 25 Nasdaq PE to 18 PE. Well, guess what happens? We're gonna literally go right back up, and we're gonna have a melt up, right? And then the melt up's gonna happen to a point where people are concerned about growth. The central banks have to be accommodative. And then the real problem is like when the Fed starts to be accommodative again, right? They don't hike rates. Say they were going to hike rates 4 times and then they'll do only 2. After like a year or like 6 months, the demand doesn't really come back. So now we actually have a deflationary bust, right? That is the end outcome. That's when the market is going to crash, right? Yeah. Every single asset bubble, if you look at the 1980s, it happened in 1929, the 2000 and 2008. Every asset bubble burst when recession happens. And that happened in 2008. If you guys have lived through that, you guys remember 1929 was a Great Depression, but this is like the mother of all asset bubbles. So the deflationary, so the deflation theme is actually going to cause the bust, not the inflation, because demand fell off a cliff. We have way too much production, way too much stuff. No one's buying anything, and then then we get a deflationary bust, and a bust literally will cause the market to crash, and that's where I think. We're going to melt up like insanely. Everyone's going to jump into the market. People are going to feel like, it's the roaring 20s again. And then the market's going to realize, holy shit, deflation is a problem because there's no demand. Yeah, there's no demand and we're going to have a huge bust. So the key indicator look at is housing. So the reason why I don't think a crash is going to happen because housing is very healthy right now, right? There's still a lot of the housing market still going strong. It's still staying steady. They are starting to the data is starting to actually peak and decline now in terms of housing starts, the cost of lumber and all that. But eventually when housing prices start coming down, that's when deflation is actually hitting. And that's when you see there's gonna be a lot of issues because the housing market is the largest asset market in the world because trillions of dollars are tied to derivatives and a lot of different things through housing, mortgages and all that. And if we have a problem with housing, that's when the market will actually collapse. And that's going to happen later once the deflationary bust really kicks into gear here because demand just basically fell off a cliff. So
when I think about recession, the thing that concerns me is that you get a different kind of recession than you've seen before. And if you think about it, we're living in a digital age. And I think that if something were to happen in terms of, if there were to be some kind of conflict, that we've already seen the beginnings of these kind of things. Hey, we're going to knock out the water lines here, or we're going to affect the energy supply here. These are the kind of things that are going to happen. You see this very growing populism across the world. Everybody's been, nobody can travel. Everybody's in debt. There's inflation, and I see it here in the United States. Sometimes you can't even talk to people because, if they go going on whatever their politics or their vaccine politics or this and that, there's just a very bad situation. And I think it's very global. And historically, when you look back in history, you have tremendous amount of debt. You have growing populism. This eventually leads to conflict. And so we're living in a digital age. And if I want to affect you from across the world, the way I'm going to do that is I'm going to try to affect your food, currency, your energy, your currency supply. My concern is that the recession is going to come from people are going to wake up in the morning and whatever they thought they had because they just opened their phone and it was there every day, it's not there anymore. And so that's my concern, is that the recession is going to look different than what you've ever seen before, because it always is, right? Sometimes it's a civil war, sometimes it's somebody invading your country, whatever. But this is kind of like where my head is at, and these are how historically how these things are.
Can I share this article just real quick? You guys see this screen?
Sure. Wait up. Go ahead. Go share. While
Oh,
he
do you
was
guys see it?
talking, I shared the Russian ETF. Go ahead.
I just want
And
to share
I
this real
don't mean to
quick.
go. I don't mean to go like all Alex Jones on you and stuff like
Oh,
that.
it's fine. Do you guys see
Let's
this?
go.
Do you guys see the screen right
Let's
here?
go
The
here. I can see it.
Stelco.
Top
So
Yep.
Canadian telco
yeah,
warns
so look,
market
this is what's going to happen, right? Because it can again sentiment can switch so fast because again we're living in a digital age. Information travels at the speed of light, basically, right? So look at like the seller industry. So steel had an amazing past year, right? 94% prices surged, right? Steel prices surged 94% to all-time high of near $2,000. So when prices surge that much to $2,000, guess what? All the steel factories going to do? Holy shit, guys, we're gonna make a ton. Let's produce as much steel
Let's
as
sell all
possible.
of our steel. Yeah.
Yeah, they're producing a ton
Yeah.
of steel, and then what happens when prices get that high? And then all of a sudden, the demand starts falling off. Then they're like, "Oh, so you understand? Like this is what causes this boom and bust that I keep talking about. So prices shoot up like crazy because of COVID supply constraints. $2,000 for steel, right? And everyone looks at the price like, "Oh my God, I'm gonna go ahead and jump in and make as much steel as possible because we're gonna get rich." And all of a sudden, the price then cuts off by 50. It drops 50% from 2,000 to 1,000, and they're like, "Oh my God, we have too much steel. Let's sell it for less." And they can sell so steel can actually drop more than half from 2,000 to 1,000 or less a ton. And then you can see that he's already talking about it. The steel shipments are taking a hit as rapid spread of Omicron and blah blah, and then negative delivering into automotive construction sectors. So automotive and construction sectors are very strong indicators of the economy and demand because those are actual things we're producing and big purchases that people are making. So if these big purchases are slowing down, right? He's saying customer demand is drying up, right? And so he's giving a warning, and that's why all the steel stocks like sold off so hard, because he's saying that, oh my God, we peaked. We have too much supply now. We actually now have the opposite problem. And then when supply chain issues get completely resolved, and we have steel everywhere, what's going to happen to the price of steel? It's not going to be 2,000. So it's going to be crazy.
No.
So this is why like this is one article that I've read and looking at the data that I think it's going to surprise the market. And then what happens is all the people that got short, they're going to get stuck, and then we're going to have a massive short covering rally. So ARK might actually rally really hard because I think 30 or 40% of the float on ARK is short. Like way too many people are short ARK right now. And what happens is we're going to have a very strong counter trend rally, and then FOMO buying, and then we're going to see a massive like turnaround situation. But I just don't know when that's going to happen. But I think within the next 6 months, it's going to happen. I would say because more data is going to come more clear to us that deflation. We have oversupply because prices inflated so high, people overproduce to make more money, and it's common supply and demand dynamics. And as a result, we have oversupply. Look at Piton. They were building like how much $billion factory, and now what are they doing? Right, demand fell off a cliff because everything reopened up, and look at what happened to Piton. They literally got to stop building bikes. They literally just can't produce. No one's buying it, so they have oversupply bikes. And look how fast that narrative changed. It literally changed on a dime.
Trickle down, and that's a huge trickle down.
Do you
as
remember
far
Piton
as
was like, we can't keep up with demand.
commodities
We can't build enough bikes. We can't build enough bikes.
Yeah.
That's the same thing happening with steel, with cars, and so on. And then when the next earnings report happens, and GM and Ford are completely missing their estimates, they're no longer value stocks. They're actually negative stocks because they're now losing money, and their PE ratio is infinitely zero. If you start losing money, your PE zero is trash. It doesn't matter. So it's gonna be a really hilarious. Like Kathy's gonna be proven right, and then it's gonna be a whole like cycle again, because that happened before when ARK crashed, or I wouldn't say crashed, but when ARK went down to, I remember everyone was talking bad about Kathy when in May when ARK went down to 100. Right, it went from like 160 to $100. Everyone was talking very badly about Kathy. She's not right. She's too smart or whatever. And the market was right. Short term, they're right. But from a like 5-year horizon, I think Kathy will end up correct. That's why we talked about last time. All of us said that we'll buy Kathy once he gets like 60 or something, or anything lower. You know, we'll see how low it goes. But I think it'll be a smart play to make, because her stocks will do the best in a deflationary environment, like Tesla, DocuSign, all these innovative companies, because they're going to be able to manage their costs and produce a shit ton of cash because of their business. So that's kind of like what I want to share with you guys here real quick is this article by the steel executive, right? That's why these earnings are really important. So Nucor is going to be on Thursday. Nucor reports, and they're like a
On
huge
Thursday.
multi-billion-dollar. Yeah, Thursday, they're multi-billion-dollar company, and we have to listen to their guidance and what they talk about prices.
Yeah.
So if the market reads that and say, "Oh my God, steel prices are peaked, and now we're facing deflation," it's going to be the complete opposite response that everyone thinks is going to happen. So
Some of the most informative things I've listened to is earnings calls. Like, and you have to really be paying attention, and you have to really hear what they're saying, because
Okay.
it'll just be like 5 seconds, and they'll say something like, "We have so much money, we don't know what to do with it, but we think we're going to do this, and it's really going to open up this or that." Or it could be like the complete opposite, but it'll give you like this huge macro view of what's going on with everything, and I completely, I
So
think it's great that you picked up on that with the steel.
yeah, one last thing I want to add to real quick
go
is
ahead.
a high debt environment creates deflation, by the way, because debt is naturally deflationary, right?
Because there's no demand when
Yep.
people are getting killed. You know what? I'm so
Yep.
happy we guys talked because Jeff gave a lot of ideas. I took a look at the stocks that he mentioned. So Nucor, okay, let's just share the charts of Nucor right now. So Nucor is gonna report numbers this week, and you've got these steel companies really being pumped ever since. Just wanted to share. This is a triple top, 108, 110, 116. I think no matter if Kathy Wood is right that it's deflationary, you still have tons of downside on commodity stocks. I mean, your upside is just 110 if I know you if steel continues to go higher. So the way I see it, the risk reward is purely on the downside on steel. So Nucor is giving us a plenty of short position here because like 30 to about 120.
Yeah.
If this is gonna be a deflationary asset come 6 months from now, it's gonna go back to about 80 or 70. And then you've got the likes of X, right? So this United States Steel,
Yep.
it's been topping out as well. And then here's the thing: material stocks, right? We can clearly see
Yeah, look at that. It broke the trend line.
this is a short, right? So, I mean, we may not want to short ARC because I
Yeah.
mean, I wouldn't short ARC. Definitely, I won't short ARC.
It's too low now. Yeah.
It's too low. I mean, the risk
No.
reward is just skewed to the upside, even if you're bearish. It doesn't. I mean, let's assume that it's gonna take time for these because I think one of the biggest questions on ARC has nothing to do with ARC. It's actually on how massively long some people are. Because I'm talking about like the average retail investor. Because I've seen data. There was this data that buy now, pay later firms, like a firm. One of the things one of the reasons why people shorted them is because most of the Americans, they said, were just leveraging heavily. So I'm not sure how much leverage there is on Robinhood, how much leverage there is on IBKR, how much leverage there is on Charles Schwab. So it has nothing to do with the company fundamentals. It's just the people speculating. People speculated on Tesla. It has nothing to do with Tesla as a company. They've got great demand, the numbers are there, and most likely, Kathy was right. There's actually deflation happening maybe next year or already happening. But even so, it's the market. Unfortunately, even if people say crypto lost $1 trillion in a month, people forget the fact that crypto also made from 300 billion to 3 trillion. I mean, it was like 10x. You were stupid if you didn't go 10x in crypto. It's kind of like that. And I feel as if there are, I mean, even anecdotally, you still see people asking for when they could buy the crypto dip, which obviously is fine because it's really going to be a long-term institutional asset. I pretty much know everyone's top pick would be Tesla, Bitcoin, Ethereum on any crash. It's like their FAMs. I'm pretty sure that's their growth stocks. It's not ARK, it's just Tesla. It's not some might even say Solana or Binance. Doesn't matter. I don't know. Or some NFT. Because just last night, I think I saw some Visa executive bought another Bored Apes for 135 ETH. So that tells you that there are people who believe in an asset class, which is Ethereum. Why then would they buy NFTs with Ethereum? Then again, what I'm scared about is that I saw a data. You mentioned it last 2 weeks ago. There's like $1 trillion of passive funds, non-thinking funds. And when you get Apple and Amazon getting stopped out like that, what do you think the average retail investor is going to do? Either they're going to switch some to cash, from equities to cash, and that passive fund flow is the driving force to sell Tesla and Apple, and it has nothing to do with Tesla and Apple doing shit on earnings. It has nothing to do with that. It's just we've got rotation in the money flow. So for me, the way I understand all these things happening, look, I don't know the bottom. I also know that the shorts are crazy. But at the same time, if I'm going to short the market, I'd probably short companies that are already reeling off the reels. Probably not the likes of Peloton, but okay, if steel prices have peaked, chances are nickel prices, lithium, copper prices, which are still high, are probably peaking. And there's also this strange thing that happened last week. We saw gold and silver go up, and then the next day it didn't follow through. I feel as if, was that a trap? Because if there's true safe haven status, I still believe the boomers would have at least bought some gold miners after doing nothing for almost like 3 years. Gold practically was just getting whip assed by Bitcoin. If gold would never even rise, oh my God, I'll tell you, recession, depression, oh my God. I do believe that the
Yeah,
world is gonna park it in Bitcoin. And
yeah,
and crypto guy would just like, I told you so. I
and
mean, I might not buy ARK. I might just buy what ARK believes in, which is okay. I know you're gonna buy Tesla and Bitcoin, right? I mean, I don't think I need to buy ARK coins. I'm just gonna buy Tesla and Bitcoin myself. I mean, I don't know what's really gonna happen, but part of me thinks that all these millennials who park their assets on crypto, they will be validated. I don't know the bottom. That's the hard part. They are leveraged though. Just last week, I think in 24 hours, the massive liquidation happened. Like $1 billion every 24 hours, every time crypto goes down. Because these guys go 10x lever on their Bitcoin holdings. So I think that when they get killed, what's the asset class that will shoot up very, very fast? It will always be Bitcoin. I think it's still gonna be so what Jeff said is right. I just totally agree. Bitcoin is always a leading indicator. If we see the bottom in Bitcoin or Ethereum, I'll buy the market, whatever it may be. I could buy Fangs, I could buy some name in the art name. I mean, I don't know what, but I will likely buy if and only if I truly see they got liquidated already with Bitcoin. Okay, time to buy. I don't know what you guys think about that. So like I'd short commodities as it probably has peaked and nobody's still shorting commodities that high. You've seen people talk about oil being their top asset class, even when Kathy was saying, actually she's getting laughed at with her oil call, because oil shot. And hats off to Doc T, who said oil's gonna be a big
Nope.
good play for. I mean, right now oil miners are still strong.
Yeah.
At some point, though, my sense is if we overshoot oil, just like how we overshoot steel and lumber, I mean, it's just that not all commodities deflate fast. It's possible that the drops on commodities have happened for lumber, for steel. But what about oil? It hasn't stopped rising. Nickel hasn't stopped rising. Copper has not stopped rising. So I think like there's still a lot of asset classes in the commodity space that has some it has some more steam left to go. That's why if there's some steam left to go, your bottom is gonna come March, April, May. It's not gonna be this January. It's too early to bottom this January. If we do a short-term bottom today or tomorrow, we'll rally what 5%. And you're right. If we rally 5%, what's gonna happen? Everyone's just gonna short the market yet again.
Down.
They probably won't short their beloved stocks. I don't know what they'll short,
Yeah.
but they're gonna be part of me is gonna think they're just gonna trim their equity funds. And because right now FANGs comprise 40% of your S&P 500, FANGs comprise like more than 50%, I think, of NASDAQ. You'll still, I mean, you've seen how Nvidia was so strong. in terms of earnings and outlook and execution. But what did the market do? They just killed Nvidia left and right. So at some point, I know high quality is going to be great, but I want to pretend that the market is so bearish that I could buy these Teslas and Nvidias at such a cheap price, and I don't even have to do anything, just by staying in cash and then just being nimble. You'll get the
Yeah.
price for whatever you want, and you'll be validated. End of the day, Palantir's not gonna go anywhere. Palantir's just been growing all sectors, right? So I think even in recessions, it's more
Yeah.
critical. Actually, I was surprised, to be honest, how Netflix fell this earnings call. I mean, I haven't read the earnings, but how bad was it for people to just
It's their
get shocked
guidance. That's why
20%
The
down?
guidance.
they met earnings, but their guidance was instead of 6 million for next quarter, they only
2
forecasted
million.
2 million. And also because they have a lot more competition, right? Disney
Yeah.
Plus and all Paramount and Peacock and all these other
But
platforms.
so like they have
Um,
250
so
million, right? Like Netflix has
yeah, they're still a
250 million
cash machine. They're a
subscribers.
cash machine. So
Yeah.
So
They need
so
a
wouldn't
they need
wouldn't
another they need
makes
another Squid Game.
wouldn't Netflix
Squid
be
Game
such
2. When
a
is that?
value play for even investors to think? I mean,
yeah,
I was never thinking of Netflix to be a buying. I didn't think that, sometimes it's weird. It's the earnings growth outlook that gets people too afraid. And I feel as if, all right, what happens if next quarter Netflix managed to beat that 2 million? You overshot because you got scared. Netflix gonna just grow 2 million, and the next quarter it grows 2.5 million. I don't know. So I mean, I have to say that I was shocked with the drop on Netflix, and Disney was slaughtered after Netflix got killed. I had no plans to buy any of these. I mean, it wasn't like my top pick. I mean, I was thinking, yeah, it's probably just gonna stay there flat. But if they get killed this year, like let's assume Netflix just gets killed 60% from the peak. What was it? It was trading 700, right? What if Netflix traded at 260 or
Yeah.
280? I would probably buy it. Even if I'm so bearish, I'm gonna think, isn't Netflix as big as Apple when it comes to cash flow machine? It's like Microsoft. I'm like, okay,
Yeah.
if that's gonna be how things are gonna go, I don't need growth. Netflix is I'll just get Netflix, and if they punish it like hell. And part of me thinks we may end up with super huge, convincing earnings next 6 months. So I wouldn't think of a melt up. I guess I'm bearish in the sense that I still see so many buy the dippers. That's why it's very hard as well to convince me that we could melt up to what, S&P 5,000? Because S&P 5,000, that would mean Tesla's gonna shoot all-time highs within 6 months. Is that even possible? Like, I don't know. Of course,
yeah.
Elon
If
is
their
yes,
earnings are strong,
possible.
if they're basically taking market share and they're one of the few and probably only car companies growing, because right now if you try to order a Model X, which I'm trying to order, it's a year wait time. They have so much demand that they can't even keep up with it. They're able to raise prices, so the market will just price that in.
Mhm.
The electric vehicle market is like 3% of all autos, like 2 to 3%. So if Tesla could take 20% of that, one quarter, maybe one quarter of the entire U.S. auto market in the future, they can raise their prices, and they have massive margins. Like their margins are way higher than any other. Their margins are increasing actually.
Yeah.
They raised the price of their self driving thing, because like
Mhm.
I was debating if I should buy a Tesla now, but it went from 10,000 to 12,000. They raised the price of their self driving upgrade. And they're able to raise prices because they have the demand to do it. So that's why they'll get priced very, very richly for that. And while the other car companies are losing sales and Tesla's gaining, then yeah, Tesla's going to be priced even higher. I mean, it's kind of crazy to say it, but yeah, that's going to be the bull case for it. The bear case, if there's deflation and demand falls off, and that's the only thing that can hurt Tesla's narrative. But so far, their last earnings or their announcement where they beat their unit sales volume and all that, it's all very, very positive right now. So we'll see how Tesla does
So I
in
When I
the
guess
next
like
few
the
months.
when I
best
when,
the
when I
best
look at the
quality safe haven is still Tesla. Tesla,
when I
Bitcoin, Ethereum. Is that the best asset class? Any kind of market? Because when you think of a crash, all you think about is quality. What asset would recover fast?
I
Would
think
have
it.
the reason to be
I think
bought?
it. I think it goes back to what is causing the crash. And I think if you really look at what's going on in the world, there's going to be the way I see it, all of these things are going to come into the necessity for a blockchain. You're going to need the security of blockchain, and this is what's going to because nothing is safe. You can't assume that anything is safe anywhere, and the only way to provide that safety is through a blockchain. In terms of like personal security, identity, whatever, like all those things, like there's going to be a thought process at one point that our entire world needs to be rebuilt on a blockchain. And
If that were the case, then we'll just
it
have
has
to
to
have
happen. It has to happen.
we'll have to just have Palantir.
Ethereum.
How
That's
you talk
what I'm saying.
is just Palantir and
Palantir.
Ethereum.
Palantir.
We
Exactly.
couldn't escape it.
That's the one that I would add to that is
Because
Palantir, because
if
they're
the best quality names are just you sometimes have to think the largest investors of Amazon and Netflix when it was very early on, that's why it had a bubble in the first place, was because the crowd was correct. It was going to be Amazon, Netflix at the end of the day that wins. And you ask any retail investor, they know that the safest place is Tesla, Palantir, Bitcoin, and Ethereum. Perhaps others would argue there's also Solana, there's also Binance.
Yeah.
They probably want to add other altcoins. But I think like people should realize the wisdom of the crowd is actually the smartest being out there.
Yeah.
At the end of the day,
The value is patience. That's where the value comes in. Having the patience to wait it out.
The market wouldn't have pushed Tesla just because of some Fed printing money. I mean, it went 20x because the market realized how wrong they were. It's possible that either it overshot, who knows, but if it's still an asset class worth it, then that means that people just it's really twofold. You gotta just probably, if you sold at 1.1 or 1.2, you're probably looking to buy 800, 900, 600, 500, who knows? So it's really very difficult to know though. So you want to be just nimble. It's very hard indeed to be against an asset class that is so strong. So
I looked at Tesla and to me, like if you get a bounce here, I think you can expect an upside to 1,500. I don't think it's unreasonable.
All-time high.
To hit 1,500.
1.4, 1.5.
To hit 1,500 and then come back down. That's the channel that I'm looking at, like on a monthly, weekly sort of channel here. I mean, it looks like it could definitely maybe come down to like a little bit below 900 and then bounce right up to 1,500. I can see it.
So I think I agree with the bears with the sorry, I just had to insert this.
Okay.
The bears on buy now pay later firms. After a while, I kind of agree with them. But you guys, I'm right with you guys. When it comes to Tesla, sure, the bears are just faking it. The bulls are stronger, their arguments. I wouldn't discount the fact if it wants to go all-time high, the bulls can do it. In fact, in a safe haven asset, a safe haven is something that has moat, margin increases, like Jeff said,
And
increasing prices. That's how Apple just made all-time highs
pricing power
2009 and 2010. Because the way I see it, Tesla is Apple iPhone circa 2008, 2009. You see the increasing demand. iPhone couldn't sell as many units as it could produce. If we're going to hit about 5 million, 10 million vehicles in Tesla, it's priced in. Like 2025, all of those increases in disruption for electric, people are paying that $1 trillion today because they know it's going to go 2 trillion or 3 trillion. And it's the safest, most predictable asset class they could understand. So I wouldn't disagree with those. Maybe you guys are right. You have to probably just.
And I think in this environment, I think the safest thing, at least for me to do, is to park in my highest conviction place. And for me, I think it's pretty clear Palantir. Palantir is really going to disrupt, and it's just as I say, have the time, nimble, and use cover calls, whatever, to adjust your cost basis. But you just have to be in your highest conviction,
High conviction, right?
and
So
that will
actually,
give
that would
you, at least for me, the peace of mind that okay, it's Palantir, it can fall more. I buy more.
that's what
And
people were. That's why people were confused with Kathy, because they thought that Kathy would have loaded up more on Tesla on a market climate that was scary, but she was doing the opposite. She was selling her Tesla down, like I think from more than 10% to 8%.
Yeah,
So
seven
I
percent, I
think
think.
that's what people were
but
asking.
what
Like,
people
if she's so
doesn't,
bullish, why was she selling Tesla though?
It's because it's technical. It's
but
like I wouldn't buy
Is it
Tesla
what
something
until
else?
I wouldn't touch Tesla until it revisits the
and
200-day
on the,
moving average.
yes, and on the other hand, there are other high conviction plays for Caddy that are best suited right now, that are tumbled down, and it's for her. She has to manage her portfolio, and it's just she has a lot of teams doing technical analysis and getting the best entries in their place. That I'm sure of. And as we mentioned the last time we got together, we don't know if she plays puts, calls. We don't know how she plays it. So, but for sure, she for me she's one of the brightest person that I have ever listened. So I really trust in her.
It's just she's a smart investor long term. It's just short term. From I would say quarter to quarter, year to year, she tends to buy too soon. If you look at a lot of her purchases, she's been buying, and it's hard. No one knows what the market's gonna do, but she bought JD
Yeah.
Pindodo, right? She bought the China. She had to exit like a lot of it at a loss. She bought Skills, a lot of these companies, and not understanding. I think she's very fundamentally driven, which is correct in her thesis, and she's been rewarded for that for many years. But if you think about the how the Fed plays a role, I don't. She never talks about the Fed. She always talks about like a lot
The
of data points,
company.
economic. Yeah, so that's good. So that's why I
Yeah.
balance it with like the trader mindset, by looking at the Fed, the macro, because liquidity drives valuations. Period. If liquidity is increasing, valuations will rise. If it's tightening, the valuations will come down. It's that simple. It doesn't matter how great the company is.
Yep.
I don't really. It doesn't matter, right?
And
Liquidity drives
yeah,
valuation. But for Kathy, she's talking about like fundamentals and long term, thesis on deflation. Is she's saying deflation is the real threat because technology is going to help keep prices down, which she'll probably be right long term.
Yeah.
But short term, she's completely off. So she
but
completely missed the inflation like
Yeah.
scare and all that. And
I, I
she
don't
bought she bought a lot of things at very high prices.
I
So
don't know how she can value genomics though. Like until today, because like I saw that her fund, the Art Genomic Fund, fell. Was it 75% down already?
oh my
Because
god,
I
yeah.
don't know how to value ArcG, but I saw that it's
Yeah.
like trading at $40, 46. So I mean, from as high as 117, it's now 46. Part of me is thinking, look, I don't understand this asset class, but the first that would bottom would be things that are, I mean, it wouldn't. Was it somebody? I think somebody said if you truly understand genomics, perhaps ArcG could be like at 40 or 30. It's, if you're waiting for RK to go $60 or $50, ArcG is probably there now. Uh, so I don't know how further lower it can go, but I would just put it in my watch list, just take a look, because at some point, the riskiest asset classes, if Bitcoin stops dropping, if all these biotech names and ArcG would stop dropping, that probably means, hey, we've bottomed out. We might not bounce. This is another question, because as somebody asked
Yep.
me, assuming we bottomed, how long would we recover? I said, my experience, usually if you drop that low, it takes fundamentals 6 months, a year, or 2 years just to recover to all time highs. Because we're not talking about Tesla that just dropped 10, 20%. 20%, that's fine. It can go all-time highs. As he said, can go 1.4, 1.5. It's still a bull market intact for Tesla.
Mhm.
But you couldn't say the same thing for Teladoc, for Arc Genomics. What fell a lot? Crypto is weird. Crypto is the only asset class that can fall 80% and just jump all-time highs within a year. But that's just crypto. Only crypto can do that. Michael Saylor could fall, I don't know, $200 and then immediately rise $600 and from McDonald's to billionaire status yet again. I mean, that's how crypto is. I think like there is one asset class that I am, slightly aware that can just shoot back up for no reason. So I'll be looking at, if I'm going to try to bottom fish, perhaps the most speculative assets, the ones that got killed massively. Like I wouldn't say that small caps would get killed further, to be honest. Like I'm looking at some small caps, they're trading below cash. So I pity them, especially like the 3D printing names like Nano Dimension. Rick Fulop just got killed. How much is DM now? 4, 3? I'm not even looking, to be honest, because I pity them. It's not as if they are doing a bad job. It's not as if they are wasting the cash they got from their IPOs, but they're just getting demolished simply because they are a special purpose acquisition company. So one thing that I think is going to be so surreal this 2022, I don't know when it will happen, but when the SPAC winter is over, when the ARC Genomics stops printing new lows, and when crypto stops printing new lows, that's when I'll probably cover the shorts, because this market is going to go up, up, and away. I don't know how high, but that's like just at the back of my mind. That's going to be my bottom indicator. I have to find the riskiest assets that people want to kill. Example, Robinhood. If Robinhood stops falling down, if Peloton stops falling down, that's when I know time's up. All the bears are done. It's time for the bulls. But until then, I'll look at the markets with the cash and a bearish eye. Not because I'm bearish, but it's because the market is still positioned, still heavy longs. Perhaps not the short-term put call ratio. I'd say I'm thinking more of the passive funds that went in during 2020 that haven't fully closed. Because we saw like Robinhood was sharing, what was the data? 20 million accounts. Was that right? I can't remember how many clients opened. So you can imagine this retail army is still surreal. The memes, I don't know what's gonna happen with the memes. It is surreal that GME is falling. Part of me is saying, I know this is weird and I secretly want GME to win. I'm not short GME. I mean, I shorted 150, I covered immediately. But with Robinhood here, don't you think GME should just swipe and swoop and match up with Robinhood now? Like, let's get married tomorrow. If I was GameStop, I'd probably set a bid tomorrow on Robinhood and give them a timeline. If you want me to buy you at $10 or $5, I'm in. And that's gonna be a huge win. If all the GameStop investors suddenly are the owners of Robinhood, wouldn't that be cool? I mean, I think that's really like a movie script. I feel, but I don't know how dramatic Wall Street could be. You never know. Keith Hill becomes the CEO of Robinhood, appointed CEO or some brand ambassador. I never wanted to learn options until I saw how $25,000 could just be $25 million. Hats off to Keith Hill, aka Roaring Kitty. If he never did it, the impact of one guy making it that big. He was just a simple guy and he was just there talking about his GME value trade. That's like what every retail investor wants. You don't want to be Warren Buffett. Neither do people want to be Cathy Wood. To be honest, I mean, maybe I'm Degen, but my mentor would be Roaring Kitty. Like, is there a Roaring Kitty GME fund again? Because I would invest in that, even if it's just a small fund. And then we'll just go degens, buying longs and call options on some whatever meme that he wants to buy. because there's really a group. If GME made it, what happened? The AMC Club did it. And then there are people who are doing it with Shiba, with Doge. Meme stock investing, he is the father. If people said there is the father of momentum investing, the father of tech bubbles, the father of innovation, or the mother of blah blah, and the father of value investing, this is the father of meme investing. We just saw the father of the meme investing crowd. And that's really a surreal thing that the world never knew was possible. That they could just literally buy some value names that are getting killed short. How much do you think is gonna be the biggest short squeeze? I still haven't checked. But part of me is thinking, all of these penny stock players, if it's like 99% down from its peak, wouldn't you think some of them would just squeeze the hell out of the market just for show? That, hey, I could manipulate the markets as big as that unusual whale out there. So I don't know, but that would be like the parts of the bottom. That's what happened during March and May. Mind you, it was GME and AMC that lit the fire for the squeeze. Remember when GME went up? I'll share it because that's how I made money on March. It was the GME squeeze, and I was like thinking, oh my god, this was so predictable because like Reddit was just gonna buy it. Look at this. We were bottoming out during March, and it squeezed like from $90 to about $200, and this was also this March, 120 to what's this 300. If this 92, hey, look at this. Look at this GME. It just bottomed out again last $90. I don't know. I guess I'm such an incessant GME trader. I look at GME because I think it's just a sentiment indicator of the crowd. If this could rally 130, then that's your squeeze play. GME or AMC is always the squeeze play. Look at AMC now. I'll share the AMC chart. So AMC during May went from 12 to 72, right? During March, it also rose from 6 to 16. So I don't know about you, but I'm just looking for when's the next moon of GME and AMC. So like, I'm super degen. Like, hey, give me a sign. GME,
Yeah, I think
gonna go up now.
I think SPACs, like if you look at like how things got shot, it falls in line with liquidity being removed. I mean that's the biggest like macro thing that everyone needs to understand. So they're never gonna go back up, because liquidity is like, I don't see the Fed pumping that much money back into the economy and central banks doing that again. If you look at SPACs, right, they're highly speculative, they're not profitable. You look at small caps, you get ARKG. We talk about all these. Like ARKG, right? Genomic stocks are valued like 200 times price to sales. It's just crazy stuff. And yeah, they're innovative and they might do something in 5 years, 10 years, who knows?
And they're literally the zero sales club.
Yeah, and that's why they're getting killed. And then you look at GME, AMC, they're very speculative, right? They're just based on a lot of gamma, a lot of people playing the market because there's so much money, right? And in crypto as well. Crypto is very speculative. It's really a Ponzi. A lot of it is Ponzi. You only buy it because you think it's going up, and if you don't think it's going up, you're going to sell it. So that's why crypto moves first. So, and you saw so much money being put. A lot of money is being literally taken out of the system already, right? And they're hiding in the MegaCaps. We know that. We talked about it.
Yeah.
And now we're starting to see the generals getting shot. We're starting to see weakness in Netflix. Nvidia, right? All these companies. So we need to wait until this cycle really plays itself out. So that's why I think like it should play out by February, where everything comes down and we're not in full panic mode yet. So that's why I don't want to buy. I'm just gonna watch the action. Like we need to see panic. Like we need to see where like people are just so sad and they're thinking about selling their retirement account. I mean that's how bad something like the March COVID crash was a good example of like pure panic. But we need to reach a point where
helplessness.
Like,
March 2020,
no one wants to buy.
Remember, nobody knew the support. No chartist would attempt. It was helplessness, and even if you knew how great Shopify's business model was, it was a time when you didn't even know if $375 Shopify would go $250 the next month. I feel as if I just want to be bullish when everyone's helpless. Exactly. That's one of the reasons why I couldn't buy.
Do
Because
you
like
remember,
some
Nikki, what you
people,
said in May? Remember the March, April, May, and I remember you messaged in Fiber, and I'll never forget it. You said that I think we're ready for a reversal because everyone is messaging me telling me they should nuke their accounts or something like that. Like everyone was super bearish with you, and they're all messaging you directly.
yeah,
And then that's when May we
with the
saw the
rally,
massive reverse. Yeah, and then
yeah.
everyone was like shocked. I mean, we're all shocked. I'm like, I can't believe Net went to all time highs, Nvidia went to all time highs, right? I'm just like, what's happening? Are we still in this type of crazy bubble market? And certain stocks were, but now it's getting narrow. Now
It
SPACs,
went too
small
fast.
caps, crypto's gone. I don't think crypto's going back anytime soon because if we're truly an inflationary environment, crypto and gold and silver would do well. They're not. So that just tells you
Yeah.
everything you need to know.
Yeah.
We're not like they're not pricing in inflation. I'm telling you guys right now, inflation is done. Like that's the old news now. It's gonna be like the headlines in like the in New York Times and all in politics, but the market price is way forward ahead of that. So they're pricing in deflation. Okay, they're
Ahead.
pricing in a recession. So we're gonna come down, and then the Fed and central bank like China is already forecasting a slowdown. The U.S. economy manufacturing report was negative, right? The last time the manufacturing index was negative was in March 2020 and April 2020. Now we're negative. Like we have to basically comp off last year's like growth, and we're not going to be able to do that. We're going to actually see a contraction in the economic data is going to start to contract because last year was just fucking nuts. It was just so crazy how much, and think about how much like money's being put like the cryptocurrency holders lost $1 trillion of wealth, right? Stock market equity, people who hold all these growth stocks, they lost half of their if you
Yeah,
didn't sell, you lost half. So
average half.
so demand is going to continue when asset prices deflate, demand starts falling off a cliff, right? People don't have the same wealth that they used to have in order to buy more goods. And that's what's happening. Everyone's going to slow down their purchases. Like, I'm not buying more stuff. I bought a shit ton of stuff over Christmas, but I'm done shopping. I'm not going to shop anymore because I think I'm good where I'm at.
So, so
But
you're
like,
gonna just short consumer discretionary, consumer retail, because that's also my view. Like, how could people spend in a recession? I don't know where money's gonna park,
so,
but I know
so
that they're gonna try to save money, right?
yeah, I
They're
think
not
where
gonna
money's
spend
going to
it
park
all.
is the defensive sectors. Like so, consumer discretion will probably get hurt because that's just because it's like luxury and stuff. But Costco, I think, will be good once we
Yeah.
start seeing a bottom. Costco is growing their margins, their sales, and if we have a deflationary environment, Costco and Walmart are going to kick ass. Like
So
I'm
consumer
shopping Costco
staples
even
are
more.
the best assets.
Yeah, because you
Consumer
have to.
discretionary
It's a
are all
must
the sell
purchase.
assets, right?
Yeah,
Yeah, that's
utilities
also my view.
they're
That's
must
why next
purchases.
era energy would end up being bought. Because next era is utility, right? It is the largest number one electricity distributor in America. I don't know how much dividends next era energy has. They're like 2%.
Yeah, it's not
Either
Yeah,
great.
way, I think it's like
and
2%.
then And then another point I want to make too is like this is an interesting point that I learned from Jim Bianco, who's like a really good
Mhm.
bond guy. He said that S&P is the best performing index of the past 2 years, like better than the Russell, because when things are really speculative, the Russell index outperforms everything else. SPY actually underperforms because when we're in a risk off or risk on speculative environment, growth, economic growth, the small caps are what does performs the best, and Russell just kills it. And we saw some of that in 2021, but SPY ended up being the best index because a lot of people are just buying inflation.
The FANGs.
I mean,
They're
they're
buying
buying
FANGs.
index, right? It's all about index. They just put all the money into index funds because a lot of like managed funds aren't doing well or cannot outperform SPY. So SPY is actually it's actually misleading to read the SPY because SPY is being propped up by all this index buying and all this money being accumulated into the mega
And
caps.
passive.
Yeah, so it's hiding so much carnage that's already being priced in. So we will get to a bottom soon. I would say within the next 3 months, probably I would say February after FOMC is done, and then we're gonna have a very strong counter trend rally because the sentiment's gonna shift from inflation to deflation and slowing economic growth. And when there's a recession, then the bond prices are not going to are going to be priced accordingly where equities is still a good place to park your money, and then once we actually face deflation, right, and we face recession, then that's when the yield curve will invert, and then it'll be a flight to safety to bonds and the US dollar. So that's kind of like my long term thesis. But for the time being, given the gamma index, the GX gamma exposure, we're and put to call ratio, I think we bounce this week. We're going to see like 2 or 3 days of green. People are going to buy in, and then we're going to sell off again because SPY broke a key support level. I just placed it in my chat here.
Yep. Mhm.
But it broke this massive trend line. It broke the February 2018 or February 2020 trend line. If you look at that trend line, that's always been like the strong trend line, and it actually broke it. So I think that we could see some more downside after like a little bounce to retest. I think 450, 460. We're gonna retest the 200 day at least. We're gonna retest it and probably reject it, and then we're gonna come down further. And then the melt up will then happen when everyone least expects it. So
So
that's when inflation becomes
believe that.
no longer a problem.
So I guess this week is earnings week. We gotta listen to what Amazon has to say. Apple. Wait, when's Amazon's reports? No, this week is
Amazon?
Microsoft, Tesla, and Apple.
Yep.
So next
Yep.
next month, when's Amazon? Wait. So yeah, I guess like when it's so critical that the market is here, people would just listen to what Amazon says and all these fangs. These are still I mean, they got to talk about the AWS, right? It's reporting Feb 3. So that would be next week. Oh, okay. So, I mean, we are past like 90 minutes. I don't think that I want to take any more of your time. Do you guys wait, you guys want to close this with like just one liner for the week? Just
Yeah, I
one,
think
stay safe, whatever you wish, cash.
yeah. Again, I think sentiment is everything. So right now, the U.S. just ordered its embassy to destroy sensitive documents, and
Yep.
they already told all of their people to evacuate Ukraine. So the embassy in Ukraine is actually burning and destroying their sensitive information. That to me tells me that a threat is imminent. I saw on Twitter tanks moving in. Russia has amassed 265,000 troops. They already did a cyber attack against the Ukraine government. They have spies and embedded Russian loyalists within the Ukraine government to overthrow it. All this stuff is lining up. Russia already established a supply chain to their army. They're ready for prolonged invasion or prolonged conflict with Ukraine, and that is what matters. That's going to send oil fucking crazy high, and based on what happens with Ukraine, I'm not even going to go long until this situation clears. Like the market is not going to go bullish until there's certainty. What the market hates the most is uncertainty. Inflation data,
Uncertainty.
economic data, the FOMC, the Fed, how many rate hikes, Russia, Ukraine. If there's a shit ton of uncertainty, we just keep selling off until we reach like a short-term bottom. But right now, for me, I'm not going to be bullish. I know I've been talking bullish, and a melt up's going to happen, but that's going to happen later. But I'm bearish still overall because again, there's too much political risk and uncertainty with the market. And if Russia invades Ukraine and we have a conflict between NATO and Russia, and what, God forbid, oil is going to spike up, and it's going to cause a lot of issues with the market. But we're going to panic sell, and when that panic sell happens, I'm going to start buying like Shopify and all these great companies because their business is not going to be that affected by a conflict between Ukraine and Russia, right? So it's going to be a buying opportunity. So we'll see what happens if Russia does actually invade Ukraine, which I think the chance of that is a 9 out of 10. So 90% chance it's going to happen. We're going to have a Russian invasion into Ukraine. There's too many things they're doing. Like you would not set up a supply train and send 265,000 troops and hundreds and hundreds of tanks and artillery to the border if you're not going to do something up with it. That just doesn't make any sense. Like they're ready to do something. So that's my one thing to focus on top of earnings and everything else. That's more important because that will cause the market to actually sell off and be a black swan event, so to speak.
Dr. Martha, any last words? Or do we
For
end it
me,
with what Jeff just said?
Stay safe next week. It's as just Jeff just said. It's too much uncertainty. It's everything. It's crazy. So just for me, it's be cash and stay nimble I
Stay
wouldn't
nimble.
be long.
Mm-hmm. Doc, I think you're the most permeable in this group. Save
Oh,
the
I
book.
am.
Joke.
Yeah,
If the biggest fool can't be bullish, you know how bad the world is.
yeah. Yeah, I mean, I would say, cash is a position. Um, you know, I think if there's ever a moment where you're going to be positioned in cash, it's probably now. Um, with that being said, I do think that you can go. I think you can open up some longs early in the week, based on what Jeff was saying. I would
Bounce
agree with
play
that. Yeah,
Monday.
technically it looks ripe for a bounce.
Yeah.
2 to 3 days bounce, by the way.
Yeah, and then so if you want to long something just for a couple days, swing it, and then cash.
Yeah. So I don't disagree with everyone. So like you probably get that good bounce because we did tank quite heavily. I remember somebody saying, if every week is just what happened last week, I'll be up 100% in a month, shorting this market, which
Hmm.
is which means that he also knows how unsustainable this drop is, no matter how bearish the narrative goes. So I learned a lot. Thanks, everyone. I hope that
Thanks.
we do have this again 2 weeks from now. So see you again next two
Okay.
weeks, and learned a lot. Let's just be nimble, and you got opportunities, long, short, whichever you wish. But if you're gonna go long, just be very fast because there's just
Yeah.
so many resistances, too many resistances.
Yeah, remember, this is the second time this happened. The last time we sliced the 200-day like this and just sewed through it
2020.
was 2020. And guess what happened? We went down below the 200, then we bounced to test it. We faked everyone out. It was a bear trap. It was a bull trap. We went over the 200-day, and then the COVID crash happened. So
Yeah.
that's why we don't know. So you have to really see how SPY respects that
Yeah.
support when it
Yeah.
revisits it, right? So you got to be careful. And that's why I'm really worried, because this
Hmm.
never happened since COVID. Is we sliced through the 200-day, because that's a clear technical breakdown, and it's
Yeah.
officially, the Nasdaq is officially in a correction
Yeah.
territory, official
Yeah.
correction, and that what that means is we'll bounce and then we're gonna come back down, because the correction doesn't get done in just a few weeks. Like it needs to play out for a quarter, and then we'll see how price respects where the bids and the ask are basically.
So
So
Jeff
yeah,
thinks it's a 2 to 3 day bounce. Anyone here wants to negate that 2 to 3 day bounce? Can it hit 5 day bounce or same?
No, I agree with that. I mean,
Agree?
I look at the
To three
transport
day bounce.
IYT, and it's sliced right through the weekly 50, and
Okay,
historically it goes through that. You're getting a nuke. So
I agree. I agree. So basically, I actually agree. Relief rally
Yeah.
bounce, sure, and then we get clobbered again. So stay safe. Thanks, everyone. See you again next 2 weeks. Bye bye.
you
All right.
guys.
Thanks.
bye.
Take care. Bye bye.